Hi and welcome to IB Times UK. In the financial crash of 2008, a lot of people lost their faith in banks. And after that, we learned the details about scandals like the LIBOR rigging scandal and the Forex rigging scandal. Since then, the UK government has made a lot of regulations to tighten the rules, but also the European governments. I'm joined here today by Robert Powell from Atrali Trading Solutions. Thank you for being here, Robert.
Thanks for inviting me.
How do, for example, MiFID II, which is a European regulation, how does that differ from the UK regulations, and how do European banks have to go about those rules?
It's actually quite interesting, the history. MiFID, the original MiFID, or MiFID I as many people are terming it now, was a piece of legislation that was voluntary across the European Union. So member states could opt in or out depending on which pieces they wanted to take. MiFID II is a different structure, so it's mandatory across the 28 member states. It will encompass everybody, and it's been agreed at a political level. So it's a totally different raft of legislation that was pushed through after the financial crisis in light of some of the things that happened, like LIBOR and the FX rates. So it's going to affect all of the banks inside the European Union. And you could say, if you like, that the regime is being pushed through above what many states have in place at the moment. So it's not a seismic shift. So if you look at the record-keeping requirements for most member states, they already have quite a lot of very, very powerful rules in place to have the banks and financial organisations store data. This is a change that allows regulators to have that data stored for up to 7 years. It also allows them to conduct monitoring and surveillance. So it actually requires the banks to conduct monitoring and surveillance. And that's going to have some interesting implications as far as privacy and other things for the traders inside the European Union.
And before January 2017, I believe that's when MiFID II will be in place.
Yeah.
What are the actions European banks should still take? What are the big challenges for them in the meantime?
Whenever you're looking at monitoring and surveillance, trade reconstruction, anything to do with data, I think you need to start thinking about how you get your data in order. So there is a new type of data that needs to be stored under the rules, and that's mobile phone calls. So they haven't previously been captured. So they are captured in the UK at the moment for client orders and for transactions. And in the future, the regime changes, so the wording in the rules change a little bit to anything intended to lead to a transaction. And then they put this little bit, whether it leads to the transaction or not. So if you're having a conversation about pricing, that's clearly intended to lead to a transaction. That should be captured even if the transaction doesn't happen on that phone call, right, or on that email message or on that Bloomberg message. So the idea really is banks should be preparing how they can access their archives. So is their data accessible? So having it on digital media rather than tapes. So we're still dealing with quite a few customers that have tape storage for voice calls and for other things, and they're being moved over. So there's a lot of projects going on at the moment to move data over. Make it accessible. Indexation is very important. So it's great having a big lump of data, but if you can't search that data, so give me all of Robert's phone calls, give me all of Robert's email messages, that's very difficult in terms of being able to access the data. And then for the monitoring and surveillance, they need to work out how their team is going to work in order to get the data out of the system. So can I find messages that might have market abuse in? Can I find messages that might be maybe giving away confidential information? Now, I ought to highlight, while I'm talking about that, this is not the norm. The traders and salespeople and the financial markets professionals who are in the street today are not routinely conducting market abuse using their messaging systems and telephone calls. But my experience is that quite a lot of organisations, if not all of them, will find some element that they'll want to talk to their employees about, maybe increase their training program. So that there's three things there really. Make sure your data's in good order, make sure you can search it, and then make sure that your monitoring and surveillance program is up to scratch.